I'm Charlotte McLeod with investingnews.com, and here today with me is Brent Cook, economic geologist and partner at Exploration Insights. Thank you so much for being here.
Yeah, nice to see you again.
Nice to see you as well. So where I thought we'd begin, we're here at the New Orleans Investment Conference. I wanted to ask you about sentiment in the junior sector. I watched one of your recent interviews and I kind of laughed because you basically said, well, it sucks. So any updates there? Does it still sucking?
It still sucks. Although, I'm usually not a real positive, optimistic sort, but I do feel certainly in the precious metals sector that we are bouncing along the bottom, and I do expect gold to do well next year for a number of reasons I'm sure other people have told you about. But I do think we're at a changing point in the gold price, and hopefully that filters down to the mining companies.
Yeah, I was going to ask you, usually there's an exception to the rule. So if it sucks in general, what types of juniors are the exception? What kinds of companies are doing well right now?
Well, really, discoveries. I mean, still, if a company announces a stellar drill hole, it gets recognized. We've seen that with Philo, which is pretty old. We've seen it with Snowline. Just last week, Hercules put out some very interesting results. That stock's more than doubled. So drill results still work. But what's surprising, and what I think the real opportunity is right now, is there's a lot of companies that have solid deposits that are at work at these metal prices. They make money, and you can buy them for they're just selling. They're cheap. So I'm looking at actually higher up the food chain than I normally look.
Interesting. And also interesting that you're saying, okay, the discoveries still work, because one thing I've started to hear people say is that, even when companies are releasing their results, they might be good, but then people take it as an opportunity to sell because they're sick of that. So any comments on that? Are you seeing that as well?
Yeah, definitely that's happening, because I think people are so burned out. This market that's been sucking for 3+ years, and more than that, really, that it's just like, I don't care what the results are, I'm out. And I get that feeling as well. You're like, I'm done, I'm out. Which again marks the bottom as well.
Can you say a little bit more about how you're kind of looking further up that food chain at the moment?
Sure. I mean, I can give you examples.
If you would like to.
Yeah. So, I mean, there's not that many really high quality deposits. And by high quality, I mean high margin, that are permittable in good jurisdictions and have the access, infrastructure, and such. So those are the types of deposits that I think the major mining companies are going to buy. And I look at a company like Rupert Resources in Finland. He's got a fair market cap in the 600 million Canadian range. They have plenty of cash. But they've got a deposit, this open pit deposit, that's running in the order of 2.5 grams. I think it's about 3 million ounces. That's something a major company is going to want to buy, in my opinion. And you can get it for probably a third of what the real NPV is right now. So those are the sorts of things about it.
Okay, thank you for the example. And I always like to ask, I think this is a fun question, but for you and Joe, you're traveling around to visit companies. Any site visits that you've been on recently that were interesting or were you?
Well, I was just in Nevada, a few months ago now, looking at Headwater Gold. And they're making some grassroots discoveries on, in epithermal gold veins that no one's drilled before. So that was really encouraging to see some real smart, younger people going out and finding things. Joe travels way more than me now. He was just down in the jungles of Peru with Hannah, and they've got what looks like a porphyry copper somewhere in there. Very early stage. They're just pulling rocks out, but they're pulling bornite boulders out of the stream. So there's something up there. So that sounded like an interesting trip I wish I'd been on.
I want to touch on gold for a minute because it's interesting to me. Usually you hear when you have a high gold price, which we do, it's historically high, that should generate interest in the resource sector, including the juniors. And yet we're not really seeing that right now. So Any thoughts on why that's the case?
It's just no one really likes the sector. The people who know it are mostly old, and so they're not really, speculating in these high risk stuff. And most of the fund managers and such now have never been through a gold market and don't understand mining, and they're all, tech, high tech, AI, all that sort of stuff. That's what they're into. So the sector's basically abandoned. But I think it's going to turn.
Okay. And do you think, you've kind of mentioned a couple of times now this age problem at various levels of the industry. Is that going to solve itself when things get better and just interest comes back in? Are people going to be more interested in going to school for these things as well as investing?
I don't know about going to school and learning about it, but certainly at this show and a lot of shows I've been to recently, there's a lot more younger people taking an interest. I was at the Beaver Creek show, and there's a presentation someone's giving. I asked a question of the audience, how many are here for the first time? And probably over a third raised their hand, which surprised me. And that's, that's big time investors there, fund managers and such. So interest is coming in. They're trying to figure it out. It's a very complicated business, and there's some really, really good people, and then there's some real scumbags. And you've got to differentiate that as well.
Okay, thanks for going into that one. I think that's definitely true. Okay, I'm going to bring up briefly uranium, and we won't get into the market dynamics, but we want to come at it from a geological perspective because that's where you focus. So, people are probably a little bit more familiar with typical metals, gold, silver, copper. Maybe they understand that a bit more. What considerations do you think people should pay attention to geologically when they're looking at these uranium companies?
Yeah. Well, my first job at a university was looking for uranium in the Colorado Plateau, so I've got a handle on it. My opinion, there's not a lot of need for exploration. We've got more uranium drilled out into resources that are just sitting there waiting for a higher price to come on. So if I was to buy a uranium company, and I do own a couple, I would look at companies that are actually producing uranium or have a short time frame to get it producing, or something like Energy Fuels, who are producing some, and they've got deposits that are ready to go, and they're probably looking at bringing those on now. Chemical. So I would stick with personally the producing companies as opposed to exploration, just because there's plenty out there in the ground waiting to come on board.
Right. That's kind of something that's come up a little bit, and is that, these explorers for uranium, probably this cycle, you won't see them come online, right?
Yeah. I mean, they might get some traction, but realistically, I can't see many of those getting bought out by a major, and putting a mine in production is going to take 10, 20 years if they find something.
Certainly that makes sense. Okay, so getting toward the end, I want to give you what I think. I've been saying it's a fun question. We'll see if it's fun. But do's and don'ts for investors heading into the end of the year, perhaps into 2024.
Well, I think we're going to see a nasty tax loss season, given how bad it's been. And I think that's going to be a fantastic time to start picking up these companies that actually have resources, viable resources in the ground, and have enough cash to get them through into next year. Because I think next year is going to look a lot better for precious metals. Copper in particular, I think if we hit into a recession, could get whacked, and that's the time to back up the truck on those, because looking further out, the whole decarbonization, electrification that's going on a global basis is going to take in the order of 7 times more metal than we're producing now. And copper is the key metal. So that's my thinking right now.
Okay. And any final words of advice for people that you would share, or any other thoughts that you are having top of mind about the resource sector?
I think it's a great place to be. I think it's a lot of fun. I think to be in this, you really need someone to kind of advise you if you know what I mean, like a geologist or further in the industry, or, my personal suggestion would be go to explorationinsights.com and have a look at that, see what Joe's doing, and maybe see what the letter's like.
Okay, that sounds like a great suggestion. Thank you so much for coming on to talk about what's going on. Always great to have you.
Thank you.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. This is Brent Cook with Exploration Insights. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.